The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the June 29th. Wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go look at the circumstance of these markets. We'll go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I am here to serve you. So feel free to pick up that phone. Now is not too early. 877-927-6648. Of course, you can call in on the local number internationally, 727-445-1044. We'd love to hear from you no matter what. Of course, you can ping me inside the Tiger's Den, send me an email. I will tell you, there were some emails that were sent yesterday. I don't believe they came until after the show out there. I think I covered it, so I'll try to get to those as well. Sometimes it's difficult for me to see the emails during the show, but send them anyway. Send those cards and letters. So let's go ahead and get the show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show right now. Dow's up 225 pointeroonies. It's trading at 17,635. Pretty much right into resistance. The S&P 500 up 29 points at 2064. Pretty much right into resistance. The NASDAQ Composite, and actually it's more the futures contract than these, and I'll show you what I'm talking about. The NASDAQ Composite trading up 74 points. She's trading at 47.66. So it's the NQ that's trading right into resistance. It's the ES on the daily chart right into a resistance zone. It is the Dow futures, all three of them right now doing the same thing out here. Something to think about. We've got gold trading up $10 at 13.27. There is no resistance there. It's really a support area that it needs to take out. Otherwise, no reason for it to not move higher. Silver trading up 50 cents, trading at 18.35. Light sweet crude up $1.27. She's trading $49.11 out there. We've got to the upside. You've got Tesoro. I think that's how you pronounce it. Versus Tesoro. Two different companies. One cures cancer. The other just pumps. Just deals with oil and gas. Well, this one here that does cure, I think it was ovarian cancer, if I'm not mistaken, up a nice 108% right now. So I guess that phase 3 trial worked pretty well. That's up $40 out there. Priceline is up $37. That's 3%. You've got Intuitive Surgical up $18. Chipotle up 14. BlackRock up 9. To the downside, you've got Esperion Therapeutics down $6. That's down 40%. Maybe they're on the opposite side of Tesoro. I don't know. You've got Lipocine Inc. That's down 51%. That's up $3. Autoliv, ALV, down a couple of bucks out there. Not Sherwin-Williams is down a couple of dollars. So let's go take a look at what the markets are doing, the message of the market, so what it is that I anticipate from this point forward. Yes, there was clearly a bottom that came in. Yes, I am long. Subscribers are long. About 90% invested on the long side of the market out there. We'll see how this works out. However, I anticipate that we're about to see a retracement unfold. Now, it may not start this afternoon. It could. But it's coming soon. It's coming to a theater right near us. It's going to appear on your screen out there. So you're going to see it. Now, we'll talk about some people could make the case. I'm not going to make that case. I'll try to make their case for them. Right? We'll give you both sides of the case. Some people make the case that right now, right this second, is the time to short the market out here? I don't think so. But let's go take a look at what the message of the markets are. Enough blabbling. That's not even a word out here, but enough babbling out here. Let's first start off with your friend in mind. Let's take a look at the FTSE. Now, because the FTSE is one that was supposed to rock us to the downside out here. Much like the problem that we had over in China. In the Shanghai, took a while for the problems that they had over there to really roll forward into the U.S. But nonetheless, that was about a year ago, right, when it was going to just simply continue moving to the downside. Of course, what we really found was that I have had a number of people send me emails and say, "So how did you call that bottom again?" What was interesting as I was looking for that bottom, as that bottom came in. It was when CNBC was doing these special reports. At first I was like, I don't know if is it really going to form a bottom? And then I heard the news that they were having these special reports. It was just like that during the China syndrome out there. Like I know it was it was more than a year ago. It wasn't in June. It was in August, right? And it was when they started putting on those special reports to try to scare the living daylights out of everybody. It's like I think everybody uses the front page maybe of Barron's that catches it too late, or some magazines out here. Look, let's just take a look at this. Let's look at what the FTSE has done. It has made the FTSE, and we mentioned this yesterday, FTSE is stronger than any of the indices out here, right? So if that is the thing that's going to take us south, that's all BS. That's all before Steve. Okay, because I'm going to give you the accurate information out here. And so if we take a look at the FTSE, right now today it closed out at 63. What did it close at? The actual high close was 63.6006. Now, 63.6006 takes us back into its most recent swing point high from April 21st. It made it back up to its swing points before any other index out here. The DAX, not even close. The U.S. indices, we're not even close. We'll get up there, but not even close. So we want to watch to see what the FTSE does. It's going to go test those highs. This is where the downdraft, the Brexit downdraft began. This is on June 24th, when the market had woken up out here. But that looks to me like what the FTSE wants to do is go test that high. Now, that high, that price point is 64.27. Can it go ahead and take out those highs? That's a great question, and I don't know. It's going to try to do that. We'll see how this week ends out here. This is a weekly chart for the FTSE. You may recall last week when we were looking at the weekly candle for the FTSE, what we were looking at was that the actual candle session was a bullish candle session versus a bearish candle session. Now, what the FTSE actually did today with that close is it took out its first line of resistance, which was a descending trend line. If we take a look at the descending trend line out here, we're coming off of the high from the week that began in May of 2015. That is my touch point. My next touch point that I use out here is the top of May 30th, 2015. And then the very next high that I use out here is April 23rd. I got three nice touch points out there. I actually have a fourth, because if we take a look at the high from June the 10th out here, you can see that also acted as resistance. Now, it's only Wednesday, so there's two more trading sessions to see whether or not the FTSE goes right back underneath that trend line. It wouldn't take much to do that, but as we speak right now, like it had done last week, right? Last week, it was trying to take out that trend line, failed to do so for reasons we know of. At this stage, it looks like it's really going to go try to make a run for the high of that descending price channel. That's right around the 64.40-ish type level. If it catapults that, folks, what a message that's going to send to you and I. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
$222. That's what the Dow is up. 222 points, 17,632. Let's go out to Denver and speak with Daisy May. Daisy May, thanks for calling. Thanks for holding. How are you doing this morning, right? Still morning time for you.
It's still morning time, and it cooled off for a change last night.
Oh, very good. Well, we won't see cool weather here in Florida for a while, but you can send some our way.
Yeah, we're back up to 90 today, but last night we had a good rain and a little bit of hail.
Ah, okay. Well, thanks for letting us know. Now, 90, is that normal temperature this time of the year for you in summer, or is it just kind of come every now and then?
We had 90s almost all June, and that's not normal.
Wow.
Usually, hottest month is supposed to be July, and it gets up into the 90s and high 90s.
Boy. So that's what you have to look forward to. Well, sorry, but of course, all you have to do is drive up into the mountains, and then you're cool very quickly. So, hey, you want to take a look at EWU, the iShares MSCI United Kingdom ETF. Tell me what you're doing, how I can help you.
I wanted to know about an entry point, if it's a good way to participate in the FTSE in case the FTSE continues upward.
I don't know the answer to that. I don't know if this represents the FTSE 100 or some other index in the UK. I will see if I can find out for you, but I don't know that it'll show up on this system here. So the first thing that I would, excuse me?
That's okay. Just if you can do your numbers on it.
Well, the reason that I say is that because if you're trying to make a judgment call based upon what I'm looking at in the FTSE, could be totally different than this indice out here. So I would at least do some research on it. Let's just do this for the moment. Let's assume that it does represent, and it must not represent the same thing as the FTSE, because the FTSE 100 that we're looking at is already back to its April highs, and the iShares MSCI is not.
Right.
So it's got to be two different things out here. And so I don't really know how, and the reason why I am going to be hesitant upon any information I would give you on this is simply because the underlying asset of this is going to be the indice. And I really want to see what it is doing out here. The FTSE, though, is very close. So I would say this, though. Now is not the right time. An entry price it's too late for an entry price. And the FTSE is getting too close to a key level of resistance, which is a descending price channel somewhere around the 64, 20, 30, 40, 50 level, somewhere right around there. I won't know until I actually see it hit that area. And so I would wait, because this is where the FTSE could find resistance and back off. Doesn't mean that it's a high and it goes all the way down to the bottoms. But it just does say that at this stage here, you're so close to a resistance zone, if you're watching us on Tiger TV, that, that for that reason alone, I wouldn't take a look at a long trade inside of that. That being said, if you're asking where's the place to buy on this thing, these things are so hard because you've got currency conversion, I would think, going on in it. You may have currency conversion going on. So this can be both a currency play as well as whatever the actual index is. So what about the other one that you asked for, STWD? Is that also foreign? Starwood. Let's take a look at Starwood, because I think I could probably assist you there better than I can on EWU. But in the case of Starwood Properties, let me know what you're looking for.
I have a position.
Okay.
Further down, and
okay.
I'm wondering if this would be a good time to add. I wanted to add on the ex-dividend date, and I thought it was yesterday, and it was the day before, so I missed an entry point there. But just wondered your thoughts on an entry point for adding to it.
Sure. So let's look at that. So let's use a couple of tools out here. You've got Starwood Properties. It is trading right now at 2056. It has a brand new TAS market profile daily box that had formed out here. Let me do this. Daisy May, are you watching us on Tiger TV by any chance?
No, I'm just on the website watching that little video.
Yeah. Okay, so you're watching it. You'll be able to see this. I'm going to go ahead and get rid of pricing out here, and I'm also going to go ahead and turn off the weekly profiles just for a moment. You're going to see just blue horizontal lines on your screen out here, and when each of these boxes form, what you like to see from a bullish standpoint is you like to see a new box form with a high above the previous high, with the low above the previous low, and it just makes it much easier to give us a bias as to what it's doing. And I don't know why. And this box that formed today is inside that existing box. To me, that's not necessarily a bearish sign, but it's not a bullish sign. So we're going to call it neutral to, oh, darn, I didn't want to see that take place out here. Resistance inside, with that new box having formed out here, the first level of resistance on this isn't far from where it's trading. So 2076 happens to be the top of that box. And, so the place to be adding might be on a pullback into, I would say, yesterday's candle session. Let me put the daily profiles back on. Now, here's the other thing I wanted to show you, and you'll see this pop up on the screen. There is a huge level of resistance out here, which was from a gap to the downside that occurred on December 29th. Now, the volume on December 29th was only 2.3 million shares, but it's December 29th, so we have to give it a little bit of credit for more volume because it was a holiday. We saw price up there, however, on a non-holiday day, to my understanding, June 9th. And the volume on the way to the upside there was only 1.2 million shares. So forget about the market profiles if you want. Price is running up towards resistance, which is 2110. You need to see that get taken out before you really, since you're already in a position, to really go ahead and add to that. Because otherwise, this thing could get smacked down. Now, smacked down, I don't mean that in a real bearish negative sense, but there's no reason for that to not come back, perhaps, and even test that swing point from yesterday, somewhere between 1986 and 2039. Or go ahead and add to your position if it's able to break above the highs here from the trading day of December 24th. And that level out there is 2143. So that would be my call as I see it right now on Starwood Properties, STWD. Okay?
December 29th was an ex-dividend date, which they usually dump on an ex-dividend date.
Got it. Well, they did that, and I will tell you that it still doesn't even the volume up at the highs out here, 1.7, and it was doing 1.2. So even still the day before, it just simply let it take out that resistance zone. And not that there's not plenty of other resistance zones along the way. You and I just get to look at this chart and say, well, that's acted as resistance. You're pretty close to it. Now is not the time to add to that position. That would be my take.
Great information.
All righty. And
Yeah,
you bet. Thanks so much for calling. Sorry I couldn't be of assistance on EWU out there, but I'd just rather call it like it is.
Good. Thank you so much,
Okay.
Steve.
All right. That was Daisy May in warm Denver, Colorado. This is Steve Rhodes with TFNN. We've got the Dow up 230. S&P is up 29. We get back from this break. Let's go take a look at the Wilshire 5000. Yes, it created an island bottom. And that represents all of the stocks in the United States, not 5,000 of them, because there's not 5,000 stocks. Has it ever formed an island bottom before? The answer is no. Steve Rhodes, we'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We've got the Dow up 225, the S&P up 28. So look, let's do this. I mentioned the Wilshire 5000. Let's just go take a look at that just for a moment here. Actually, there's island tops all over the place out, or island bottoms, I should say. We got island tops and island bottoms, and I mean Stevie doesn't know really what to make of it. But we got to go with we got to go with what it is, and then we'll make a I try to come up with a meaning here as we take a look at the Wilshire 5000. And right now, it's made let me turn off those profiles. Give me a moment here. It's made close to a 0.618 retracement from high to low. The high that I'm referring to, and this was a Gartley buy pattern, and that was confirmed yesterday inside the Wilshire 5000. All right, with every Gartley buy pattern, you've got, 5 different outcomes out here. This has already achieved outcome number 2, which is a 0.618 retracement. Now, it's done that. Let me do this here just to make it a little bit easier. Let me move those Fibonacci numbers over to the left-hand side. Let me see. I think I can do that. Center, go to left. There we go. Okay. Now, just make it a little bit easier for us to see. So if we take a look at what the FTSE did, from the trading session, the close on June 24th, it went ahead and gapped down on June 27th. Moved higher yesterday, but it never touched the low of that June 24th area. Today, gaps up, creates an island bottom. I surfed around. There's one more test I could do, but I surfed around going all the way back to the data that I have in the FTSE, and the FTSE inside the Wilshire 5000. I could not find another island bottom. Now, an island bottom or island top are the most bullish and most bearish patterns out here. Now, the cool thing for those of you that are bears, you'll want to pay attention to this, because if that bottom gets taken out, it spells major trouble. In the case of the Wilshire 5000, not that it can be traded, but to give you an idea about the health of the market, that would say there's really nothing to stop it from getting back to at least the February 1st high, if not getting back to February 11th. You've got a Gartley buy pattern. You had a bullish reversal signal yesterday, and now you've got an island bottom. Folks, H.M. Gartley, he's been out at the bar, since yesterday when he saw all these Gartleys out there. He wants to bring that book back and sell it for the same type of price that he was, because he's got he textbook-wise, it doesn't get any better than this. So what does that say for us in the Wilshire 5000? You've got as bullish a message as you can. Says this is going to go ahead and run up to its next level. That's going to be the 0.786 area, 21,696. Make 100% movable move. 21,999 when it gets up there. Then we'll see what in the heck that it does out there. But guess what? You've got an island bottom inside the New York Stock Exchange, NYS. NYA. There we go. I knew it wasn't NYS. You got the same pattern here inside of the New York Stock Exchange. Now, unfortunately, you talk about my best interpretation at this stage here for the New York Stock Exchange is consolidation. The reason is because we've got an island top out here inside the New York Stock Exchange that occurred on June 23rd. The high of June 22nd was less than the low of June 23rd. Then you had that big gap down on June 24th. Now we've got a 2-day island out here. So that says to me that the New York Stock Exchange at this moment is stuck inside a consolidation. It's going to have a lot of meaning to both you and I, whether it breaks out that high, because there's nothing more bullish than a failed bearish pattern. That happens to be that swing point from June 23rd. Nothing more bearish than a failed bullish pattern. That happens to be the swing point from June 27th. Folks, it doesn't get any easier than that for us to be able to make the call as price gets above or below those swing point areas. We're in the middle at this stage here. So if we're in the middle and you're not already in a position in the market, then the answer is don't get in. And that would just be one of my calls at this stage of the game out here. What else has a island in it? The IWM. If you want to take a look at the ETF structures out here, it has an island bottom that formed over the past couple of days. Today was a nice gap up here. The IWM, you'd have to go back and study previous islands to understand whether or not it has the same type of meaning out here, but it very well may. So you've got a nice island bottom inside of the IWM. What else formed an island out here? I know there's something else. What is it? The NASDAQ composite. Let's go take a look at it. COMPQ. It formed an island bottom today. Very much looking like, you got to look really close. The low of June 24th was 46.9842. The high of yesterday was 46.92. Those $6 that it missed by, or 6 points that it missed by, are really important. So you've got an island now. The NASDAQ has an island top as well. Its island top is all the way back here Let me make sure of that. Yeah, it's all the way back here on December 29th and December 30th. So, that may be where its target area is. The next target, though, inside of the NASDAQ composite is going to be the 48.25 level. Now, that is assuming that it can clear resistance. I suggested that those that want to short this market, well, you couldn't get it. Of course, you wouldn't know this unless you had Stevie's hidden signal out here. So if we take a look, let's go back to let's go to the ES Mini. We haven't even been there yet. Let's go take a look at the ES Mini. Let's study this in a little bit of detail. And there was a message that came in that was asking me about Gartley patterns, and the listener said I couldn't find the Gartley buy pattern in the ES. And I believe they were looking at a daily chart. And you are absolutely right. There is not a Gartley buy pattern inside the ES. It is inside the NQ daily chart out here. But nonetheless, we're going to go take a look at a couple different levels of resistance inside of the ES Mini. The first is going to be Stevie's red line. This is a red line. This is not a political red line. This is a monetary red line that you want to follow out here, because this helps us to understand which side of the trade to absolutely not be on. Now, of course, I'm on the long side, so I am anticipating that the ES Mini is going to be able to take out this level. What is that level? 2058.48 out here. But you can see how prices backed off of that area. It got up to a slightly higher high. It got up to 2059.75. It wouldn't surprise me to get up to 2064, I think it is. We'll go back and take a look at that exact number. But here is one significant level of resistance out here inside of the ES Mini. Am I going to close out the long position? No, I'm anticipating that I got in towards the bottom here, and no, there's no reason to close out the long position. Let's go take a look at the intraday charts. Well, let's do this. We'll go to the intraday charts, but I'm going to turn over to my other futures contract out here. We're going to take a look at this contract, and I got a lot of stuff on here. I'm going to go ahead and turn it off. Let's do this. Give me a moment here to turn off some of these things. We'll clean up the charts. It'll make it easier for us to, we'll leave the Fibonacci numbers out here. Let's get rid of that horizontal line. Let's get rid of that small rectangle. Let's actually get rid of that Fibonacci number. Let's get rid of the TAS profiles. Because here's one thing that we know. This is a pretty decent rectangular consolidation. And price certainly broke through it on the trading session of June 27th when it formed that bottom out here. We can go take a look at that bottom that it formed. And then yesterday it got right back inside of it. The meaning of that is that it was a false breakout to the downside. What does that say? That says your odds favor that you're going to go right back up to the top of the consolidation. Where is that going to be? It's going to be a range. It could be the high of June 24th out here. That price, by the way, would be $21.19. However, it's not necessarily going to do it on a continuous basis. In other words, just continue to. It may, but it's running into resistance. What resistance? Well, I showed you one line. Let me show you the second line out here. How about, is that actually, there's a new profile that just formed in the ES? I'll be a son of a gun. Okay, so that next level, there is a new profile out here. We're going to have to go study that during these next 3 or 4 minutes. And then when we come back, we'll go take a look at that. We'll take a look at some intraday charts that suggest a pullback is near. And we'll try to identify the levels where that pullback will likely take us to. And that becomes your next buy point inside the ESP. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. If you're watching us on Tiger TV, you are looking at a screen that is blank of price. We're just looking at our TAS market profiles, and there's a brand new one that formed today out here. Now, the way that this profile formed, as we take a look at the meaning behind it, if price is able to get above 2064.30, can't do it by, well, can do it by getting 2064.50. So if it gets up to that level, stays above that level, that is a bullish biased profile. What do I mean by that? This new point of control here is closer to the bottom of the box versus the top of the box. This new profile formed at a higher level than the previous box out there. And that's bullish if price can get inside there. But 2064 is a resistance zone. So now inside the ES, right, if we open up Stevie's screen out here, we've got my resistance area at 2058. We'll just call it 2059 because it's going to change by a few pennies as price moves up and down. So that's a resistance zone. We know we've got 2064 as a resistance zone out here. I'm going to go ahead and put price back up on my screen. It's a brand new box which formed below price. That's why I said I wanted to study it for a moment. When you have a box appear and price is not contained within inside that box, it can also have some really important implications. So for those of you that are bears, I'm going to give you the bearish side of this. As long as price does not get above 2064.50, that's bearish because this box formed with price below it. And until price, that means price has got to prove itself for you. But what I would say to those that are bears and are still holding on here, if you see price get above 2065, if you see it get above 2078, it's going higher. Do as you wish with the trade, but price will go higher, and inside the ES Mini, that's up to the 2105 level. Okay, so we got that. Now, there was another question that came in that was asking, is it possible that the inside the ES, I'll answer the question here, but then I want to go back and explain the reason why I would come up with this. And the question is it possible that this just formed an A to B equals CD to the upside? Now, what would that actually look like? If I had my A to B equals CD tool on here, I would show you. How can that be? Well, we're going to go ahead and add it. This is going to take me just a moment to do that. Okay, now we've added it to the screen here. That would say that your A point, this is a doozy. Okay, this is the February 11th low. That's what I would be using as my A point. Your B point is going to be the high out here from June the 8th, and your C point would be right down here on June 27th. Now, that would give you a price projection of 2304. That's what most people would go ahead and give you as the price projection. And quite frankly, that would be a one-to-one price projection. And if the highs of 2110.75 get taken out, what I would say is 2304, you're setting your sights too low. It's going to be more like 2392 because of the shallow retracement that took place on this. But this is not a pattern that we have to worry about until we see how price handles at 2110.75 level. Otherwise, it's only a potential pattern. Now, the reason that I wanted to take a look at the NQ on this, I might not have mentioned that, but that's what I want to do. I'm going to put the NQ up on my screen out here. The reason I wanted to mention it with regard to the NQ is simply because of the Gartley sell pattern. There's Gartley buy patterns that formed on here, and there are two of them. So HM is just loving it. Here's the first pattern. We're going to come all the way back to the highs out here from April 19th, down to the low on May 6th, up to the high on June 7th. And you can see it did between a 1 to 1.272 A to B equals CD. These price projections on your A to B, your lightning bolt pattern, and the Fibonacci expansions, price doesn't have to hit it to the tick out there. Oftentimes it doesn't. We use these as a ruler to give us a guideline as to where price is going to move down to. When the cavalry arrives, we know where the bulls are, just like on an A to B equals CD to the upside, or a Gartley sell pattern. You know, when the cavalry arrives, we know that it's now time to consider taking a position out here. In this case here, the position was to the long side. Now, this is the NQ, which also formed a brand new daily profile out here. However, this one's got the low, today's low below yesterday's, and the high below yesterday's profile high. So it's confused out here. Nonetheless, the price level to be watching inside the NQ this afternoon, overnight, tomorrow morning is going to be 43.63.50. I think that price is going to get smacked back from that area. How much of a retracement, because we haven't had much off of the bottom yet, how much of a retracement we get, I don't know. But a retracement is due. It's getting a bit tired. It has been working out its muscles. And, you know, sometimes you got to take just a little bit of a rest out here. Now, that's the first A to B equals CD to the downside that formed. The second one is the one that came off of this high out here, this little shooting star on June 7th, down to the low out here on June 16th, the hammer candle, up to the high out here on June 24th. That makes a 1 to 1.618 A to B equals CD. In fact, it makes a butterfly pattern as well. So you've got both a Gartley pattern. The Gartley pattern out here is just simply a retracement of this first leg up, the one that came off of the lows here from February 8th all the way to the high out here on April 19th. Now, what you have is we just took a look at two Gartley patterns. Now, I'm going to show you the butterfly that is in effect out here. And the butterfly requires an expansion between two swing points. Well, take a look at the expansion. I'll draw it in. That's coming from this swing point here from May 6th bottom to the high out here on the trading day of June 7th. Now, that price projection, 41.95. So you have two Gartley buy patterns and one butterfly sell. Now, the beauty of that Gartley buy pattern is that, and I'll tell you the beauty of the butterfly buy pattern as well, but first let's go take a look at the Gartley buy pattern. The Gartley buy pattern is there's 5 outcomes. 4 of those outcomes are nothing more than retracements, 0.382, 0.618, 0.786 of the entire A to D leg move. The fourth one is 100% move. Of course, so well coined by Tom O'Brien that we have to pay him a royalty every time we say 100% move. Don't worry, Tom. The check is on its way out there. It's a beautiful way to explain what the market is actually doing. The fourth is that if, in fact, the NQ is able to take out the high from April 19th, that high, by the way, is 45.76.50, that's when you will know that you've got outcome number 5 that would be in place. And that would be an A to B equals CD to the upside. And it is the NQ that has the 2 Gartley buys, the one butterfly buy pattern out here. And so, you know, to think that yesterday's bottom wasn't significant, and then you've got all of these island bottoms out there, well, You'd have to be a technician that says, I'm just going to ignore all of the buy signs that are out there. The 1-to-1 A to B equals CD to the upside, if the NQ is able to take out that high, is 4822.25. I suspect that is what it wants to do out here. That's what it was getting ready to do, attempting to do, prior to Brexit. And I can tell you that Brexit, when you just take a look at the FTSE again, here's the weekly chart versus last week, and basically you're already back to the highs out here. Look, the FTSE, there's no doubt, it's in a downtrend. It's not a bullish-looking stock chart. But I can tell you that last week is not bearish-looking inside the FTSE one way whatsoever. So you've got a little battle going on. Who is going to win that battle? Is it the Bulls or the Bears? I don't know. We'll stay tuned out here. But at this stage, the Bulls are making a great case for a run much higher, much longer than many folks think. There's a lot of folks that think that high comes in next week and it's time to sell. I say way too early. But let's go, when we get back, we're only going to have a few minutes. Let's go take a look at some other reasons of why I believe a retracement should begin soon. Come to a screen near you.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. We are taking a look at the ES Mini. During the last session, we established a couple of resistance zones, two totally different techniques that show that price is coming to a resistance level. Now we're going to take a look at, we're going to step this back, and what we're going to take a look at is the 5-hour chart for the ES Mini. And the 5-hour chart for the ES Mini shows and I've got its market profiles out here, and we can see that the top of its box is 20.59 1/4. So I'm watching very closely. I'm anticipating that we have resistance all over the place. Now, it's not that resistance cannot be taken out and blown out. So, I'm looking close, but this should be where the market starts to back off a bit. Why? Who knows? It doesn't have to. Okay, and I am absolutely not saying go short this market. That is absolutely not the message. What I'm trying to do is, for those of you that are not long and are looking to get long, suggesting that you wait patiently to buy the next pullback. Now, where on this chart, if I pay attention to the 5-hour chart, where is price likely to pull back to? The price point, it becomes here. It really becomes the point of control inside this 5-hour chart, which says about 2035. And the bottom of a weekly TAS market profile is 2033. So that would be the range that I would be looking for if I were just focused on this chart. I'm not just focused on this chart. I'm going to go switch down now to the 2-hour chart. We're going to go from 5 hours down to 2 hours here. And if we take a look at this 2-hour chart, this says that, hey, we're not there just yet. That over the course, this probably doesn't happen until after the market close out here, because we are only in wave number 6 of a move off of the bottom inside of the 2-hour chart out here. I would much prefer to see this eventually get to a wave 7. This chart here, the 2-hour chart, doesn't complete this candle session until 2 p.m. So only if it doesn't make a higher high, and by the way, that high out here is simply 2059.75, only if it doesn't make a higher high between now and 4 p.m., does that give us the opportunity for then that next high to come after the market opens back up at 6 o'clock and start trading the contract. So it may take a while to form. It might be 8 o'clock at night. It might be 10 o'clock at night. It might be midnight. But when we get to that 7th wave, that is likely the spot where we see, which says that the market probably overshoots these little resistance zones that we just took a look at on the daily, on the 5-hour chart out here. Doesn't have to get to a 7th wave, but boy, we'd sure like to see that out here. And then we'd like to see the pullback. Just because it gets to a 7th wave does not mean it will pull back. You want to see the cavalry arrive. Now, where is it likely to pull back to? Well, as you can see on a 5-hour, this is on a 2-hour chart, we've at least had a couple of 2-hour periods where there was a slight pullback, but not really much of one whatsoever. Some people might use a trend line, but this is a strong trend line. I'm going to use somewhere between the price area of where it's trading when it begins to pull back. Right now it's at 2057 and 2034. It's going to be somewhere in that area. So between 2034 and 2057. What did the ES Mini have that we said? We came up with a 2035 out here. So, it could easily, at 2034, that's a totally different tool and technique that I have used out there to come up with a different figure. I'll know the pattern when it gets back there. I believe I'll know the pattern based on something that'll show up on a 30-minute chart or something on a 10 or 15-minute chart. I'll know what to look for. Am I closing out my position because I expect the market to pull back? The answer is no. I've done all the hard work. It cost me 2 entries to actually, it was a 3rd entry that actually worked on going long on the ES Mini, and I still anticipate, for good reason, for this market to move higher for weeks to come. May not do it. I've got a stop in place, but it's not going to be hit anytime soon out here. And it's more than break even. So I just got to let the market trade the way that it's going to trade. So, folks, have a great Wednesday, and I'll see you on terrific Thursday. Anticipate a pullback. Does that mean that the market's ready to start moving down again? Watch the FTSE. Have a great day, folks. Stay tuned. Our man, David White, the polar bear, he's up next. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.